Hi, everyone. I'm Jeff Cassman with Catholic Men of America, and today I've got with me Marty Sergi. Hi, Marty.
Good. Hello, Jeff. Good morning.
Marty is coming to us from Charleston, South Carolina, and Marty's got a fascinating background. Catholic husband and father. He's a knight, retired Grand Knight of the state, right?
Of our local chapter here at the Cathedral at John the Baptist.
And you were an accountant in your first career, became a CEO of a fascinating business dealing with garbage and recycling and so forth. And then you got into the financial world, financial advice, financial planning. You work with a lot of Catholic families and businesses, as well as regular people as well. And but today, there's so much we could talk about. But today, I want to hear more about this fascinating program that you're participating in for the benefit of Catholic schools. Please start wherever you want. We've got a lot to talk about.
Sure. Probably the best way to start is how I stumbled on this, frankly, from the beginning. So as you mentioned, my background, I was 10 years with one of the currently called Big Four accounting firms and a senior tax manager. So I was a CPA doing my thing, helping small companies turn into big companies, a lot of tax planning, etc. As a result of that, I wound up leaving my firm to a client who was a spinoff of General Electric, who was one of the very, very first recyclers of America. And this was back in the middle 80s. I started in the middle 70s, so I got a few gray hairs. And I started as a CFO there, wound up being the CEO, and we built this wonderful firm into the largest recycling company in America. And we ran it all through the 80s, 90s, and through the 2000s, early 2000s. And what happened is when I thought I wanted to retire, my first time after those two steps of great careers I had, I moved to this beautiful new adopted home of mine in Charleston. I'm originally from New Jersey, 16-year Catholic school kid, which is why this is very important to me. And went to my college was St. John's University in New York. So I spent a lot of time in New York and New Jersey. My business was in New York, right on the Hudson River, in a building my company owned. So we saw all kinds of cool things like Sully landing in the Hudson, and sad things like the towers going down right in front of my eyes. I actually saw the second plane hit the towers. So the interesting thing is I was used to being spoiled. I had a nice company with 4,000 employees, hundreds of millions in sales, and I had all the fancy advisors falling all over us to do things for us. I moved down here to South Carolina thinking I was going to retire, did it a little too young. At the time, I was 58 when I did that, and I love to fish. I went out fishing for like 8 days out of 2 weeks, and I said, I don't know if I could do this for 20 or 30 years. So I kind of went from 100 hours a week to 0. That's not a good transition. So I was trying to figure out, well, geez, I'm sort of this recovering CPA. Maybe I could dust off my CPA and do something there. Long story short is I went out and met folks literally in their homes, and I found that this is a wildly underserved market, just the opposite of being spoiled in the New York, New Jersey area and having all these phenomenal advisors. You come down here, and as an example, the accounting firm that I work with, or any of the Big Four, they're not here. The fancy Goldman Sachs's and all the fancy investment advisors, they're not here. So it really, not that the folks aren't wonderful, but it was just a different caliber and quality of advisors. So I literally went back to school. I went to College of Charleston. I got my CFP, which I determined sort of the gold seal of learning how to be even more broad-based than from my accounting days and my running a business as a consumer of doing most things that would ultimately use here. And in that process, I said, well, if you're going to leave something behind, what would you want to do? Well, my goal is actually not only to set up a firm that would hopefully do right by my clients, but also train young folks. Start with them literally out of school. So I have 2 or 3 interns here at all times. I hire at least one of them a year, and we built a firm of 9 folks that this has been going on for now 6 or 7 years, and we've got a nice little firm. And we do comprehensive financial planning, taxes, risk management, all kinds of insurance things, and investments, Schwab Advisor, etc. So it's been wonderful, and we've gotten to know lots of folks where we become part of their family because we do everything with them and help them in any way we can. As part of that, and part of course, settling into a new community, you get close to your church. Well, when my wife and I moved here to downtown Charleston, frankly, because my daughter went to the local med school at MUSC, so we bought a place literally almost across the street from the med school on the peninsula, and fell in love with the cathedral and the community there, and been extremely involved. I'm on the finance committee, a number of things I do at the cathedral. And through that whole process and developing the firm, of course, one of the things is because of my tax background, we keep totally up to date on what's going on with taxes. So now in learning in my annual down briefing from Clemson, which we go every year to a 2-week course to catch up on what's going on new, the big, beautiful bill comes out, and so many things that are applicable to help folks, lower their tax burden or do some long-term planning, etc. One thing really below the radar, but an enormous benefit, is the new scholarship granting organization credit within the bill. So I literally called the folks that were lobbying in Washington to figure out more about it. And, I'm saying, when I grew up, my dad had to work his butt off to put 4 kids through Catholic school. Not easy, a pretty significant financial burden. I know even when I went to St. John's, I had to have 3 jobs to pay my tuition because he still had 3 kids they're all younger than me. They still had 3 kids going through the Catholic school system. So what a wonderful way if this program could lend itself to the Catholic schools and either have a much larger participation of folks getting a great Catholic education, or lower the burden on families so that some of the cost of tuition and attending a good Catholic school is offset through this program. So what I'd love to do, Jeff, I'm going to share a little presentation, and we're working with multiple dioceses across the country, but I'm just going to show you how it applies here in South Carolina, and it'll give you a sense for any Catholic out there that has an advisor or other advisors in our group that want to learn more about it. I'm available. I'd love to help. And we're doing as much as we can, as many locations, but obviously the more the legs, the better. So I'm going to take the screen.
Yep.
And I'm going to, okay. So this presentation, and if it's possible, if you can make it a slideshow, it'll show it possibly a little larger, but the key to this is that the government has set aside $26 billion a year of a new credit under the big, beautiful bill that will start in 2027. So it's incredibly important to get geared up and start now so that these grants or these credit dollars can be accepted right as we begin 2027 and start affecting at least the first 27-28 semester for Catholic schools. So here, as an example, in South Carolina, this is just the potential to show you the potential of how it would work. So the key here is it's a credit that as long as you pay taxes, it's not a refundable credit. So if you don't pay taxes, this is not for you. But if you pay taxes of at least $1,700 for an individual or $3,400 joint, you could basically say to the government, I'm going to take money I would have given to you, and I'm going to give it to the Catholic school of my choice. If I extrapolate, there are 25.77% of folks in that file taxes in South Carolina that pay more than that amount in taxes. So there's a universe of 639,000. So we say if we could get just a participation of 3 to 5%, we're looking at $30 to $50 million impact on our schools here. So it would be an enormous, it actually works out to cutting tuition nearly in half. So, or another way to look at it is it could double the attendance at Catholic schools by providing grants or scholarships to students. So if we could go on, the way it worked is originally the program was supposed to start in 26, but we had to wait for regulations and things which we're going to go through, and the new start date is January 27. But again, you really want to, as you organize these, you want to organize them in 26 so they're ready to go in 27 and accept credits. Continue. The way it works, it's simply a $1,700 credit if you're an individual. If you on a joint return, a family return, it's $3,400 for married couples. And it's most importantly a credit, so it's dollar for dollar. So I like to say when I presented it to my some of my nights at some of my nights meetings, if you had a pile of $1,700 of $10 bills and you said, I'm a good patriotic American, I'm going to use that money to pay my tax, and of course you're going to say yes, I'm going to pay my tax. Then I give you the option to say I could take that $1,700 and I could have a choice of paying the government, or I could pay it to the Catholic school of my choice to support that Catholic school and a student to be able to get their tuition paid in part, or for anything else that's allowed under the program. So, and of course, almost universally, a good Catholic's going to say, boy, that's a good idea, Marty. Let's get that money to the Catholic school. I'm happy paying my taxes, at least my fair share. But if I don't have to, and I could send it to the Catholic school, what a great idea. So the most important thing is this is an annual amount. So, and you can pledge up to 5 years in advance. So in other words, you could set up the program where every year you're getting this benefit. So if you're a couple and you have a school either your kids have gone to or your kids are going to go to or are in, and you want to get it to that school, it won't go to your child, but it'll go to that school so that the scholarship granting organization will pick qualified students. It will go there, and you'll basically have offset your taxes by that amount. Continue.
It's amazing. It's just
Yeah.
extraordinary.
So the key is for people to understand, and then a lot of the questions we're getting as we're setting these up is what's the difference between a tax credit and a tax deduction? And another question, am I limited to the $3,400 for a family? So the answer to the question is the difference is so important. The tax credit portion is literally dollar for dollar. So you are reducing your taxes. In fact, just so you know, we're working with some of the large employers here where it would actually come out of your pay, reduce your taxes in your pay, so you don't see a difference in your net paycheck, and the money goes monthly, whatever, to the scholarship granting organization. So bottom line is if it's in the credit column, so that first $3,400 for a family, that is dollar for dollar savings off your taxes, dollar for dollar money into the scholarship granting organization. If you wanted to do more than that, you wanted to do $5,000, that extra amount is now a deduction as an itemized charitable deduction, no different than you're putting your envelope in church on Sunday, and you get a charitable deduction. So the credit is more valuable as a tax strategy. Of course, both are wonderful things to do for the schools. So that's where that works. So here's the comparison. Remember, if it's a deduction, depending on the tax bracket you're in, you're paying that full amount, but you're only getting a portion as a tax benefit. Whereas if it's a credit, you get dollar for dollar. Continue. Now, who can participate? And this is where we qualify, right? So one is religious organization, check the box, we're already there. Private schools can do it as well, and fraternal organizations. Actually, one of my backups was the Knights. If I couldn't get the local diocese to do it, I was going to enroll the local state knights to do it. But here we're lucky in South Carolina and several of the other jurisdictions I'm working with where folks are very excited about this and ready to set up their SGO. So we qualify. It's just simply under a 501c3, under one of our dioceses or churches or whatever, or actually could be under the school itself. But in our case here in South Carolina, we're going to do one for the entire state. Continue. To set it up is pretty simple. All you need to know is you need a minimum of 10 students that are going to receive the scholarships. Now, obviously, here in South Carolina, we're hoping it's going to be thousands, if not tens of thousands of students, but certainly thousands of students. So we passed that test. The second is, and this one I actually like because I've actually gotten some questions of people I crossed off the list when I was training people on this program, is you're only allowed to use 10% for administration. And it should cost nowhere near that. We expect only 3 or 4% cost of administration, because if you think about the infrastructure of a diocese, they've got all the parishes, they've got all the bulletins, they've got all the newsletters. To put together YouTubes and conversations like this to educate folks will be very easy. And then we here at my firm at B Street, we've developed an app where you could literally go on, put your information, pick your school, make your contribution. We can line it up with your employer. So there's a lot of stuff, infrastructure in place, and it really doesn't cost a lot of money. And in addition, the key is as the money accumulates, we can earn some money on it until we disperse the scholarships. Basically, very simply, contributions come in. The SGO, the Scholarship Granting Organization, has a board and a committee that will award the scholarships that'll come out of those. And then, of course, the donors will get tax documents. The student's family will get similar you would get in college, where you get a scholarship in college, you'll get a 1098-T, it's called, so that you record that on your taxes. There's no tax effect, but you do have to record it. As long as your tuition's higher than your scholarship, there's no cost. Obviously, that'll be the case here. And then also there's a form that each donor will get to allow, if the IRS ever questioned, to make sure you get your credit, okay? The eligibility. Very important. 3 methods of how to do that. So first, let's talk about how we get the scholarship, or who can qualify. Very important. A lot of current scholarships are based on a percentage of the federal poverty level. This is 300% of the median income. So if you're in an affluent community, we're going to give you some examples here, but we have some very wealthy communities here, and it kind of goes by zip code. So if your community has a median income of 200,000, that means any family with 600,000 or less of income qualifies for the scholarships. So we believe somewhere between 90 and 95% of all Catholic school students will qualify for this. And that's very different than if it was under a federal program or was off the poverty level, which will bring that number down. A bunch of the principals we've been working with, their first question is, we love the program, we're doing scholarship granting, but I only have 2 students that qualify because I'm in a wealthy area. I said, no, being in a wealthy area, you don't have to worry. You're going to be treated exactly the same no matter what the income level is, because it's going to be based on the folks that live in your area, and it's 300% of the median amount. So that's going to we're going to capture most students, okay? Any individual that pays taxes can donate. Okay, so that's simple. It's every taxpayer in America that pays at least $1,700 of tax, and the funds literally will go into a lockbox for the SGO. That SGO accumulates the funds, earns some interest while they're waiting to give the scholarships, and then that goes out. So basically, the entire amount, net of some hopefully very small administrative costs, will go literally to the purpose it's intended for. Continue. All right, so here's a perfect example. Here in downtown Charleston, the single, now this is single, and there's single in household, so I used 2 different examples. So the single person is 77,000, so 233,000 in downtown Charleston. That's a number that most folks will qualify. If we go into median, Somerville is actually a little less affluent than Charleston. So I used the median household there is 89, so 267. So if you applied that to Charleston, it might be 350. So if you're a family, most will be families sending their kids, and you're making, less than 275 to 350 in my general area here, your student's or your child's gonna be allowed to do that. Tuition, textbook, well, room and board for the most part won't be appropriate, but anything necessary. So one really neat thing, if a school raises enough money that, let's say, they could offset 50% across the board of their tuition, how about they put in new labs or new something that improves their education, because now they have those funds covered. So you can raise your tuition 10%, still getting 50% offset for all the schools, right? And then you add something more for your students that they could use that they couldn't afford within the normal school budget, trying to keep tuition down. So it's very, very neat how this program could really have a major impact on our schools. Continue. So here's a very important piece, and I hate politics. I used to be in politics. I was in the recycling business, so I know all about politics. Okay, I think we had something like 20,000 communities around the country under contract. So I was from Switzerland. I was a little bit of everything. But in this case, the way it works is this is a federal program. So it doesn't matter where you live, you qualify to get the credit and to pay into a scholarship granting organization. The catch is your state has to opt in. Okay, so your state has to accept the federal program. So right now, I think we're up to 32 or 33 states have approved. Only 4 states have opted out. They might be obvious what they are. I believe it's Minnesota, Hawaii, might be New Mexico. Anyway, there's 4 that have opted out, but most states are already opted in. South Carolina, as an example, in Georgia too, I'm working in, even New York. So a perfect example, we're working with New York, and we were worried that New York, the type of state in their politics, that they would not opt in, but we were pleasantly surprised that the legislature approved the SGO, and Kathy Hochul signed it into law. So we are, and this is brand hot off the press, new off the presses. We're working with the Diocese of New York, and we're trying to get that program up and running there. But most states have opted in. If your state did not opt in, you still can support Catholic schools. Your money just will sadly go out of state. But I will tell you, I'm going to use the embarrassment factor in 2028, because if you're a state that opted out, and let's say in the various SGOs, let's just use South Carolina, we receive, let's say New York opted out, and we got $10 million from New York, I'm going to send it to the New York Diocese and say, look what you could have got. Please show this to all your politicians so they fix this. So I
love that, Marty. So if somebody is in a state that chose not to participate, the individual taxpayer could still participate. They would merely be sending their money to, assumingly, a Catholic diocese somewhere out of state.
That's right. That's right. So they can, I'll give you a perfect example. My state is opted in, and my dollars are going to go here in South Carolina. But my kids, my grandkids, not my kids, my grandkids go to the Diocese of Boston's school, great school up there, St. Patrick's. And if we didn't opt in, I would give it to whoever the Massachusetts SGO. Massachusetts is one of those states that hasn't decided yet. But if they did, I could send my money there. I get my credit. It's a federal deal. They get money, and we continue to support Catholic schools. So even if for a year, because I don't think it'll take more than a year to get a full buy-in, but even if for the first year your state's not in, it doesn't mean you can't get the credit and you can't support our Catholic schools.
And we've been talking about Catholic dioceses, Catholic schools, but it could be an independent Catholic school, right? There's some of those that are not part of the diocesan system.
It could, no, absolutely. but I will tell you they need to team up with an SGO. You can't have one school. You have to at least have 2 schools. That's one of the rules, and 10 students. So, and the reason for that, if you think about it, you could have 5 people get together and create their own SGO for their kids, right? And let's put our money in pool and I get my thing and the government paid for the tuition for my kids, right? So the goal of this is to have each state with maybe 6, 7, 8 SGOs, not 10,000. Okay. So yes, there's no question. The way we're approaching it here is through the diocese here in South Carolina, but there's no doubt that there'll be lots of schools that will just team up in some small group where, again, use an app like we have where they just select among those schools where they're donors. The only other reason why I do like to use the infrastructure that's in place is the marketing of this is the key. This is part of that education, what we're doing today. I don't want to lose sight of this on this slide. 3 ways you could give the scholarship. So it could be needs-based. So you can have the board of the SGO could say, I just want to increase the population at the school, and those that really don't have the funds, and I could put out something to say, if you can't afford Catholic school, that's who's going to get the scholarship. So it could be needs-based, okay? It could be just enrollment expansion, which is kind of the way I'm promoting it, is just bring tuition down across the board. And again, roughly 90 or 95% of students, depending on that average median income, 3 times it, will be able to participate. So just bring down the cost of Catholic education. What a great thing. Or finally, merit-based. You could have, the kid that excels or was the altar server for 8 years at his church or whatever. You could have some merit-based approach, and any combination of the above. It's no you go one path or the other. Though, as long as you meet one of those 3 criteria, that's how the board decides. So what our goal is to set up these SGOs. They're not that difficult to set up. They just have to be under an existing 501c3. And our goal is, frankly, fairly obvious. So we want to expand the funds that we could get and use these streams of cash coming in to get to our schools through this scholarship program.
Wonderful.
Okay. So here's the sort of key pieces. The effective date of actually getting the credit and putting your first dollars in are January 1st, 27. Now, we want to be marketing long before that. Our goal is, before people get crazy with Advent and Christmas, is try to be doing all this education. We just finished Corpus Christi here, and we'll be going into the summer months. But our goal is sort of late summer and use that 3rd quarter. Schools will be coming in. What's our first stop? Go to all the principals, sit with them, explain so they can disseminate this information through their parents groups. So we're going to be doing that. Next is make sure everyone understands. The last thing I want to do is embarrass myself with a Catholic. I want to make sure they understand it's a non-refundable credit. So if you have a child or you have, say, an adoption credit, the government allows you to get a refund of those dollars, okay? Meaning if your taxes aren't high enough, you get a refund. You get the credit either way. In this case, you do have to pay tax. So it's very important to make sure your tax professional knows. You literally could go on your tax return and make sure you paid more than that last year to know that you're paying at least that $1,700, because you will then get the dollar for dollar benefit. You have to make sure we meet the eligibility requirement. So the bottom line, by the way, this is K through 12 education. It doesn't want to interfere with 529 plans. So it doesn't deal with college, even our Catholic universities. So it's trying to bring school choice down in K through 12 education. Okay. The maximum credit, remember, the maximum credit, not donation, anything over the credit is still a charitable contribution, but that's $1,700 per taxpayer, $3,400 per family. We have to make sure your state's participating to open the SGO, not to give the money. Okay, you could give the money to another state, but to open an SGO, we need to make sure the state has opted in. And then we have to go through an approval process to get the SGO. Here, as an example, the way to limit the number of SGOs, the regulations that are out, at least partial right now, literally the governor has to sign off on each SGO. So again, the power of the Catholic diocese or Catholic schools and their ties within the local governments will help that happen. Here in South Carolina, we will not have a problem whatsoever, I can assure you. Continue. So our role, what we do, and this is what other advisors might want to consider helping, or we can help them get there, is we set up a lockbox. Remember, it's not a lockbox anything. We're ever touching the money, it's for the SGO to set up the lockbox. We do all the compliance to make sure. We do encourage. Some folks have already talked to me about, hey, why don't we just do this as a separate account within our 501c3, which you can do, except it's pretty cumbersome with compliance. Remember, you have that 10% rule. You have to send out new forms, etc. So we actually encourage folks to just, in essence, open an SGO under their 501c3. Investment management, we're going to invest management. Everything will be very, very high quality stuff like treasury bills, etc. But the goal of getting another 5 to 7% of return while the funds are sitting there before they're dispersed. Okay. The tax reporting, we're going to do all the tax reporting for the SGO. That's, 1098Ts, which is the actual scholarships. The 1099s, we're not exactly sure what form yet because we have to wait to the end of the year to see how that's going to come out. And we'll do all the work to send out forms for the family to basically certify that there will have the amount for that zip code of what that median income is, and that they sign off that they are under that limit, and then they qualify, their students or kids qualify for that scholarship. We're going to have pledge tracking. Again, you go up to 5 years in advance. So we'll track that. We'll do the distribution of the actual scholarships. So the scholarships will be in the name of each student to that school. So that school might get, 80 scholarships, but they'll be in the name of each student, and there'll be a neat little award so that student is recognized that they got their scholarship. And then, of course, we're going to use this program to get state expansion. We're going to try to get those states that, frankly, were dumb enough not to participate in the first place to expand and do it. So that's the role we're doing in it as my firm, trying to make it easier for the 501c3s to deal with another administrative burden that, while very well worth it, if you think about South Carolina is a small state and we're looking for $30 to $50 million, you start talking about larger states. I know, Jeff, you're in Tennessee, probably a larger population than we have. So you'd be looking at a larger amount. When we're talking New York, just the diocese of New York is 10 times the size of Charleston. So you're talking about very, very significant dollars. And again, $26 billion is in the federal budget of what they expect this credit to generate. We want our fair share. That's very simple. Okay, and then here's simply how we have, this is for South Carolina, but in our example, we're going to have the diocese, or they have a sister 501c3 that manages their funds. Is what we're going to do is have them set up their, in the case here, we've got to determine they're going to set up their independent SGO. They're going to do all the promotion and advocating. They'll use us to be the educators, but they'll put it, again, bulletins, newsletters, not quite pulpit information, but even meetings with groups like the Knights, like the Women's Club, all of those kind of organizations. We need to disseminate the information. And then, most importantly, to educate the administration at the schools so they pass it along to their families and their, throughout their school. So that'll get us to this shared mission of the two of us working together hand in hand. And that's our goal of how we're trying to accomplish what we think will become a wonderful, wonderful program. And the more, and that's why I'm so appreciative of you doing this, because the more we can get this word out, the more it can have an impact. Now, by the way, we're very happy that another private school here in South Carolina uses a similar program. And obviously there will be folks in other church schools from other denominations that will want to use this program. Our focus here at B Street is going to specifically be on Catholic schools and trying to promote it as far and wide as we can across the country.
Yeah, this is very exciting. I mean, I'm happy to be a part of helping you get the word out for this, for so many worthy recipients. This sounds like an immense amount of work for you all. It's not like your guy walking in that says, "Hey, I got $10 million burning a hole in my pocket. I don't know what to do. Can you help me, Marty?" You know, this is a lot of work in the trenches.
It most certainly is. But if you think about it, I have plenty of those $10 million folks walking in the front door, and not realistically, a lot of them are because of my ties to the diocese and things. But because of, my background and all the folks I've known through the years, I've been so blessed to have built a wonderful organization here. I've got incredibly talented people. It's time, and I've made sure, well, I don't necessarily have all Catholics here, but I've made sure they know it's part of their world. We're supposed to be doing pro bono work. This is part of our pro bono work. So, and by the way, think about it. How many great Catholics are we going to be introduced through this program that then will say, "Hey, by the way, those folks, I heard they do taxes. I heard they do faith-based investing. I heard they do insurance, risk management. I heard they know things about long-term care, and I was always worried about I'm going to outlive my money. I heard they do charitable remainder trusts for my church." So the more we get exposed to the universe of the Catholics here in South Carolina and beyond, the better it is for B Street as well. So in the process of giving back, I think it'll be quite rewarding for my team here. And someday in the relatively near future, I'm going to try a second shot at retirement, and they're going to inherit this firm. So I want them to learn how to do things properly and how to be really an integral part in the fabric of the community.
Marty, thank you for being with us today.
I appreciate your time, Jeff.
Folks, I've been talking to Marty Sergi from Charleston, South Carolina, bstreetadvisors.com. We'll, of course, put all the links into the show notes, and this wonderful program that his team has put together to help benefit Catholic schools and other worthy causes. Thank you all for being here. God bless you. And Marty, God bless you. Thank you for being here.
God bless you, Jeff.